For this month's rundown or week's rundown, we're going to be looking at developed markets. So clearly, President Trump's inauguration has been probably the biggest focus for the last couple of weeks. Questions around trade tariffs have had a big spotlight on both G10 and actually MFX. Now, his inauguration yesterday came as a slight surprise. There was no immediate day one moves when it comes to tariffs. So a lot of the dollar appreciation seen over the last few weeks against GBP and euro head back a touch. We saw the euro initially go down to 102 last week and 120 against GBP last week as well. But those dollar gains have now been pared back a bit. It's yet to be seen whether there will be another move on tariffs coming forward, but essentially there was no bomb dropped on the first day in Washington, which is probably a good sign all around, especially in emerging markets. So as we move focus towards there, Nigeria is in quite an interesting situation at the moment. We saw their new electronic matching system for their official market, FX, come into play early in December, which caused a lot of excitement, a lot of appreciation. Now, this has since been pared back again. Rates have gone up to around 1650 in the parallel. It's an interesting dynamic at the moment because you speak to people who participate in the official market. There seems to be more dollars than ever being made available. So it does call into question why there's a 7 or 8% spread between the official market and the parallel market. We'll see if this tightens up. For the time being, it doesn't look like that's going to happen. And a move in the parallel market back up to 1700, which is still below the highs we saw late last year, wouldn't be a massive surprise. But we'll see if the official market, if NAFM depreciates any further. CPI has been a big focus in Nigeria as well. They're reweighting their whole basket of goods and also choosing a new reference point. Now, the CBN and Governor Cardozo have sometimes been saying there'll be transitory effects to inflation. We'll start to see a drop-off as the one-year window moves forward. However, clearly this reweighting of the CPI basket, removing some food from the inflation calculation, will naturally make it drop anyway. So we're unlikely to see much more of a tightening cycle in Nigeria to bring down inflation because it's probably going to drop anyway. But we'll see how the market sort of takes this. For now, I don't think it's going to have a huge effect. Similarly, Nigeria's inclusion in the BRICS, so the emerging market superpower, if you like, of many nations, whether that makes a big adjustment to trade. I think China is still the focus in terms of investment into Nigeria. And we've seen various deals being renewed and agreements being renewed between the two nations. We'll see if that can grow over time and bring more dollars in country. Kenya has also gone through a similar period of inflation adjustment. The reweighting of the basket got announced today. Again, we'll see whether this makes a huge effect. The FX market has been incredibly stable still for the last 9 months. Plenty of dollars in supply. We've seen spreads at 10 cents today. Banks have got limitless amounts of dollars. So I imagine that picture will stay the same for the time being. But if there's a break above 130, it should be interesting to see how the CBK will react with their monetary policy. In Tanzania, December was an amazing month. I mean, we saw some 10-15% appreciation in the rate as suddenly the whole market became full of dollars. This reversed literally on a sixpence as we went to the back end of December and into January. So we saw rates appreciate 10-15%. They've now depreciated back again. The liquidity picture is an ever-evolving beast almost in Tanzania, and it tends to be a case of it doesn't matter what rate you'll pay, it's just the supply of dollars is either there or it's not. So we'll see if rates do stabilize in Tanzania. We're expecting them to as we go back towards the highs seen in November and December, so around the 2,700, 2,750 kind of levels. But it will be interesting to see what happens next. It wasn't a move necessarily from the Bank of Tanzania as far as we're aware, or new dollars coming in country. It was literally a case of just dollars being available in the market. XAF and XOF remains fairly stable, though we're now starting to see a bit of a depreciation in the parallel market, so the spread to the official widening. It's been tighter than ever, XOF being barely 50 basis points above the peg and XAF being around 2% above the peg in the parallel market. There is some room for this to blow out wider as liquidity for euros drops, but for the time being, we're just monitoring the situation in the Central African region.